Good evening and welcome back to Be Rich. After Bahrain, my team had a brainstorming session. The idea was where to do an event. So we thought we had done enough in Gulf and we'll take a switch. So the team decided to do an event in Singapore. We are going to do an event in Singapore in the last week of August. Those desirous of meeting me in Singapore can send a WhatsApp to the number given below or drop a mail. My team will be in touch with you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about the financial budget, which was released by the government today. Our Finance Minister, Mrs. Nirmala Sitharaman, who talked about it in Parliament, and this is a momentous occasion because this is something which most investors, economists, politicians, corporate business members, everyone looks forward to, everyone tunes in on, because this is going to set the pace for how the economy is going to move in the upcoming few years. Before we get into the budget, I want to talk about some pointers which the economic survey, which was released the day before, gave us. So the first thing the economic survey talks about is that, look, all is well. And the title itself was Steady as She Goes, which is alluding to us as being a ship, that is India being a ship, and we are sailing steadily in calm waters. This is the allusion made in the economic survey. So they claimed, or rather they stated that GDP growth was at a robust position and that things were looking up for the growth trend in the Indian economy. And they also said that we have finally improved upon our growth trend from pre-COVID times. And there's a lot of good news which the economic survey had brought forth. Yes, there were some misses, of course. We saw that scooter sales, that is two-wheeler sales, are still below 2018-2019 levels. Even vehicles are, yes, the upper end of vehicles, that is luxury vehicles, are doing well. But overall, four-wheeler sales does tend to be muted. And this basically tells us that, yes, things may be slowly coming back to normal from the COVID pandemic. And some of you may be wondering, look, the COVID pandemic happened so long ago. Why are we still talking about it? Well, the thing is, the economic burden it placed was quite large. And this is something which is still affecting India, especially rural India, severely. That being said, we also talked about how, or rather the economic survey also talked about how manufacturing had a lackluster performance in 2024. 2023, however, it has supposedly done better in 2024, is probably because they've spent a lot of money on the PLI scheme, or the Production Linked Incentive Scheme, as well as the subsidies they've provided for different factories to come set up in India, especially Gujarat. We have the Micron plant, which is a microchip processing plant, which they are setting up in Gujarat. And the government is funding about 60 to 70% of the project, both the union and state government combined. So that being said, these are some of the main pointers which we could glean from the economic survey. And today, our Honorable Finance Minister has come up with the budget, and there have been many announcements because the budget tends to be overarching and covering a lot of points. But some important key takeaways which we can look at for investors is that, one, taxes have been increased on any profits you make in the market. And secondly, taxes on other instruments like F&O has also been revised. So mainly we're seeing the fact that the government is trying to raise more revenue and cash in on the boom which markets have provided over the past 2-3 years, where more equity accounts have opened up and the government is looking to take a piece of that pie for themselves. And secondly, the government has revised their fiscal deficit target down to 4.5%, which is a lower number than what they had previously hoped for, which is 5.1%. So they're talking about tightening their belt during this period. And for investors, this probably signals that the economy may continue to grow at the rate it is growing at. But it is to be noted that when a government tightens their belt, that generally means that if you look at the equation for GDP, which is C plus I plus G plus X minus M, exports minus imports, that is net exports, you will see that the government spending, which is G, stands tall in the equation. And then you have consumption, investment, and then you have net exports. India is a net importing country. As for consumption, we already see that rural demand is only finally picking up. As for investment, yes, it's possible to say that there are plants which are propping up all over India, and that, due to PLI, we're going to see, and especially the USA-China tensions rising, we should see further investments made in India. However, it is still to be noted that it's going to be difficult to predict that, because it can go either way. We don't know what's going to happen there. But what we do know is that if the government is trying to reduce the fiscal deficit, that has to either be through increased taxation or it has to be by decreasing expenditure. And if they're planning to increase taxes and at the same time reduce expenditures, this is not only a leakage, which is taxes, but they're also reducing the amount of inflow they're putting into the economy. So the size of the economy might end up struggling to grow at the rate it was growing before. So we'll have to wait and watch to see how the policies which they're implementing today are going to affect the future tomorrow. That being said, as investors at home, what should you be thinking about this? I would say not much. I mean, it's going to take some time for the budget to take effect. It's very difficult to pinpoint and tell you how policy is going to immediately affect stock prices and whether certain industries are going to benefit unless there are sweeping changes made in those particular industries. So it's going to be difficult to predict those things. And we don't really care about the short run. This is just for 5 years. We don't really care about 5 years. We're looking at 10 years and beyond. We are long-term investors, and though you should keep track of the budget because it may open up value opportunities where companies which you are looking at but are too expensive may end up taking a beating because the market thinks that it's not going to do so well in the next 5 years. And then you can swoop in and pick up those companies for a bargain. So that being said, it's important to keep these things in mind. And although the budget is an important document, it's probably more important for the businessman rather than an investor, because as an investor, all we care about at the end of the day is the intrinsic value of the firm and whether you're buying it at below intrinsic value or above intrinsic value. What do you have to say about this budget?
The biggest thing is what you call indexation in sale of real estate. And that removal of indexation is going to be huge. Because as it is, real estate was on its knees. And by removing indexation, what indexation allows you to do is, it allows you to factor in how money erodes over time. So let's say you bought a house for 10 lakhs and 10 years later you sold it for 20 lakhs and the inflation has risen significantly during that time. You can use indexation and reduce your tax burden on the 10 lakhs which you've sold, which you've gained, and save yourself, even inflation is high enough, save yourself paying any capital gains.
Yeah.
But now the removal of that and putting a base amount saying 12.5% or whatever, is going to not encourage people to invest in real estate at all. So I don't know what the idea behind it is. I'm sure there are wiser minds to this, but it seems it's a little tough to understand. I thought they would want real estate and encourage people to do real estate, but it seems to be going the other direction. If anything, more people who are thinking of real estate will rely more on equity as an investment class. There are taxation has changed in capital gains. That is something that needs to be studied. But like you rightly said, this is just a budget. This being implemented into actual things happening, rolling out, will take time. It's not like today she announced a budget and from tomorrow you'll be paying all this. So this takes time to roll out. I don't know if it is a great budget. From the looks of it, I can't see where the green shoots are in this budget.
I'd say that at least from what I've discussed with my professors in my university and from what I've discussed with my uncles, the main component which we should be focusing on is education and healthcare. These are two things which most economists have been harping on about online as well as in academic circles. And it is something which seems to be sorely lacking in this budget as well, which was slightly disappointing to hear, because India as a country needs to do better on the front of education as well as healthcare. Because if you look at our literacy rates, we are tottering about where China was in the 90s. So our literacy rates today are still rivaling China back in the 90s. So that's a very bleak picture. And I know some of you think that we do a lot of China bashing on this channel, but what can you do? That's the yardstick which you have to compare yourself with, because it's your immediate neighbor and one of the emerging economies which had done very well for itself up until very recently. So this is something they are doing correctly, where China has managed to educate its population better than India has. And though China and India started at the same place, or in fact, I'd say India a little better than what China was at post independence, it's difficult to see why and how India has lagged behind on this particular metric compared to China. And moreover, our healthcare expenditure as well needs to be taken a look at, because it's difficult to imagine a world where your human capital is not one of the most important things a country has to focus on. And if you focus too much on industry and don't focus too much on the human capital behind that industry, then you're in for a rude awakening when your growth rates aren't as high as you expect it to be.
And it's proof of the pudding is what coalition governments are. If you see, our government is not in absolute majority. It needs its partners to be cooperative. And that's very evident on this budget. It's laying stark in front of us that you don't need to hide it. Bihar and Andhra has been enjoying the lion's share of whatever is to be celebrated in this budget. And the funny thing is, railways was such a pepped up thing and it's not even mentioned in this budget, which is a very strange thing to see. But anyway, like Sashwath says, we'll have to wait and watch to see how the implications are on the ground level in the next few months as these things roll out. The market did react. As budget was being presented, it dropped like a stone in water. Then it pulled back and recovered. And even the discount on gold, what she's offered 6%, does not help gold prices and has not helped gold stocks like Manappuram, is what I think.
And another important facet, which at least I feel should have been focused on more, is that women of our country are a group which is severely underrepresented in economic planning. Yes, there are schemes like Lakpati Didi and stuff, but that seems to be more of a lending and borrowing scheme rather than one which just puts cash into the hands of women. And moreover, there has to be more to do where people actually consider how to improve our female labor force participation rates, because that still stands at an abysmally low rate compared to our immediate neighbors who are doing much better than us on that metric. And we're underutilizing a huge resource in our economy. And the female Nobel laureate who won the Nobel Economics Prize actually is an economist who talks about gender discrimination and wage gap for women. And she actually authored one of an important piece which talks about how middle income countries generally see female labor force participation rate coming down and then going back up. And India, like clockwork, is following that trend. And it's up to us to figure out how we have to break out of this trend and utilize the women in our country for economic prosperity, and also increase greater representation in economic planning for them. Yeah.
And one of the main reasons why Anand says, think twice before you sell, and really make sure you know what you're doing before you sell. The proof of the pudding is on the long-term capital gains. So what government is proposing is to levy a 12.5% tax on long-term financial and non-financial assets. So let's be a broad stroke across the board. So that includes your equities, your mutual funds. So they've raised the limit to 1.25 lakhs from 1 lakh, which is hardly anything. And but they've said anything which is held for more than a year is considered long-term, and anything below that is considered short-term, and short-term capital gains is at 20% across the board. So this is the main problem why the market also reacted very negatively to this news.
We hope you enjoyed this video. If you liked it, please like the video. Please share it with your friends and family members if you think they have some value to gain out of this video on our budget. And please subscribe to our channel if you haven't already. And finally, if you have any opinions or any comments, please do comment it down in the comment section below. We do make it a point to read your comments, and we hope to see you again here soon. Thank you.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.